Imagine saving $22,000 on taxes this year, not over time. That's exactly what I did by switching from a SEP IRA to a solo 401k. And here's the wild part. Most financial advisors won't even mention this to you. So today, I'm going to show you exactly how this works so you can potentially save thousands too. A few years back, I was going through a really stressful period with my business. The typical entrepreneur thing, working too many late hours, not really taking care of myself. I went to the doctor and he actually suggested I try something like yoga just to help manage stress and improve my overall health. So I reluctantly signed up for a beginner's class at this awesome studio in my hometown. I gotta say it, I was terrible at it. Absolutely no flexibility. I couldn't downward dog. It was embarrassing. But there was something about that forced hour, no phone, no thinking really, just it all kind of helped me clear my head. And honestly, after a few weeks, I started noticing things were feeling a bit better. And then one day after class, I got talking with Ashley. She's the owner of the studio. She was joking with me. She's like, Rich, it looks like you can almost touch your toes now. You're making progress. And I just laughed and changed the subject. I was like, yeah, I saved over $20,000 the other day on my taxes, so I'm feeling pretty relaxed today. And her eyes just went wide. She literally froze. And I just took a sip from my water bottle. I'm like, yeah, actually $22,000 to be exact. You could tell she was thinking, how is that even possible? Now, I should tell you about Ashley. She's brilliant at what she does. She used to be this like wellness coach, and then she started the studio. It's expanded to like 3 locations. She's doing awesome. But like any successful entrepreneur, she built her business through passion and hustle, not financial expertise. She once even confessed to me that she used to get most of her business advice from Instagram and TikTok videos. So after that class, she pulls me aside and says, I've been trying to figure out my taxes, and my Instagram feed is full of financial gurus telling me to maximize my retirement contributions, but they're never really explaining how. Can you help me? This was a big moment for Ashley because she was usually the one giving help, right? She's giving people help on their alignment and their breathing, and she's helping build a wellness business in this community. Asking for help doesn't necessarily come easy for her, but that's the real thing about growth, whether it's in yoga or finances. Sometimes you need to be humble enough to seek help for yourself. So right there in her studio, I started to explain how I'd switched from a SEP IRA to a solo 401k and the tax advantages I'd unlocked. Ashley was just listening, and then she says, my accountant never mentioned this. You could tell like her face changed. She kind of looked a little upset. So I told her a lot of people stick to just broad advice that applies to everyone, but the real financial wins come from strategies tailored to specific situations, like being a business owner, owning your own business, or just plain being self-employed. So here's exactly how it works, right? With a SEP IRA, you can contribute roughly 20% of your net self-employment income. So on 100K, that would roughly be about $20,000 max per year. And that's where most entrepreneurs stop. But with a solo 401k, you wear 2 hats, the employer and the employee. This dual role is the key part, because as the employee of your business, you can contribute $23,500 right off the top at the time of this recording. That's the current employee contribution limit, and that number usually goes up a little every year. Then, and this is the magic part, as the employer, you can still add that 20% profit contribution on top. So the total contribution limit right now is $70,000 for a solo 401k. Compare that to the $20,000 with a SEP IRA, and you're more than tripling the tax advantage savings that's possible. Let me put this into perspective with like a concrete example. Let's say you're making $150K in your business. With a SEP IRA, you'd be limited to $30,000 in contributions. But with a solo 401k, you could potentially put away over $50,000. That's an extra $20,000 working for your future every single year until you retire. And even at lower incomes, let's just say $75,000 a year, that would only be $15,000 in the SEP IRA versus potentially $40,000 in a solo 401k. That's why this matters for almost any entrepreneur, not just high earners. So that's what I mean by a $22,000 difference in my case. In my situation, the switch unlocked $22,000 in extra tax advantage contributions I could make. Depending on your income, the difference could be even bigger. This is all pre-tax money we're talking about. So that's significantly reducing your taxable income while building retirement wealth. The actual tax savings, it'll vary based on your tax bracket and situation, but for many of us, it's gonna be substantial savings. But it's not just about saving on taxes now. It's about the compound growth over time into your retirement account. That extra $22,000 and even a modest average annual return means an additional $160,000 in 30 years, just from this 1 year's contribution. If we begin to multiply that over your career, contributing every year, year after year, we're talking life-changing money here. So when I broke it down for Ashley with these numbers, she was shocked. She said, "Why doesn't everyone do this? I've been in business 5 years and no one has explained this to me." And I just told her most financial advisors handle hundreds of clients and they just stick to standard recommendations. Sometimes they're trained to serve the average employee, not the unique situation of entrepreneurs. Oh, and if you're over the age of 50, there's a catch-up contribution. For most people, that means an extra $7,500 on top of the standard limits. But if you're between the ages of 60 and 63, there's an enhanced catch-up, an extra $11,250 starting this year, and that's at the time of this recording. These higher limits were designed to help people, in their earning years, fast-track their retirement savings before they begin to slow down and actually retire. So let's think about if a solo 401k is right for you. First, you need to be self-employed. We're talking freelancers, consultants, side hustlers, all of it counts. No full-time employees except maybe your spouse. That's why it's called a solo 401k. And you need to open it by December 31st to claim this year's tax break. This is crucial. Even if you fund it later, the plan must be established before year end, but you can actually make contributions anytime up to the tax filing deadline, including if you file for an extension. But, and I've seen this before, if you miss that December 31st setup deadline, you'll have to wait until next year. And you can choose between traditional pre-tax contributions or Roth after-tax contributions, depending on your tax situation. And what's especially powerful is that you can even mix and match. Put some money in the traditional to lower your taxes now, put some in the Roth for tax-free growth. Now, if you're like Ashley and you don't want any more admin paperwork or things like that, I use a specialized solo 401k provider who handles the setup process and basically takes care of everything. And that makes it easy. The whole thing took maybe a couple hours total, but for $22,000 in tax savings, that's like $10,000 per hour return on my time. Plus, you can have complete control over your investments in a solo 401k. For example, you can build that more simple 3-fund style profile, something like 60% in US market index funds, 30% international markets, and 10% in bonds, right? And then as you get older, you can shift more towards bonds. Or you could just as easily focus on dividend stocks, real estate trusts, or whatever aligns with your strategy. The point is, you decide. You're not just limited to some menu of mediocre options. So a few weeks after having that discussion with Ashley, I was back in her class, struggling through another balancing pose. Ashley came up to me afterwards, and she actually said that our talk helped. And so that's why I'm making this video. The first reaction I get whenever I'm explaining this stuff to other business owners is always the same. It's like, well, why didn't I learn about this sooner? So I don't want you to miss out like I did for a couple years, or Ashley was. If you're self-employed, if you're a small business owner making solid income, you owe it to yourself to explore the solo 401k. This isn't just about retirement. It's about taking control of your financial future on your own terms. And even if you're not ready to max it out, just getting the plan in place now opens the door to the tax savings when you're ready. Remember, you can start small and scale up as your business grows. The important thing is just getting it started before that December 31st deadline is locked in. I went ahead and put together a comprehensive guide that walks you through all of this, so check that out, link down below in the description of this video. Now, by the way, I stopped going to yoga a while back. It turns out I just prefer the gym for stress relief. But Ashley helped me when I needed it. Thank you, Ashley. And I was able to return the favor by helping her when she asked for it. So just remember, one of the best investments you can make is simply asking for help when you need it. All right, as always, I'm Rich, and until next time.